All right, good morning, everybody, or good afternoon. Welcome to Trader Merlin Show for your Thursday edition, getting near the tail end of the week. I'm excited. Some great moves in these markets. I had some options that were underwater, and all of a sudden they came roaring back, and so we'll see if they end up closing below my strike price on tomorrow's session. All in all, we had an exciting piece with regards to the earnings announcements as well, with Amazon reporting earnings, and I've been looking through the question banks. I have so many questions I have not answered from you guys, so I'm going to start things off there with talking about our Q&A show. First one I've done this year, I believe. First Q&A show for 2025, show 1062 to be precise. There is sound. I would hope so that there's sound. You have sound? My needle is popping. It looks like I do have sound, so should be good on sound. Let me know if I'm not. All right, so I'm going to start off with the first thing, and then I'll go into Q&A. The first piece for today is going to be Amazon's earnings. Now, of course, this is the last of the Magnificent Seven stocks that is reporting earnings. With Magnificent Seven, we've seen a mixed bag, right? All in all, there's been pretty good numbers, but some of them have been kind of pulling back on their forecast just a little bit. So Amazon reported today, and that is going to be the starting point for today, AMZN. It was interesting kind of watching as it came out with their earnings numbers. They just plummeted right as they came out. It was a huge drop, and then it bounced back. So here's your 5-minute time frame of Amazon. And just to put it into perspective, we fell on this initial earnings release 7.12%, now currently down only about 2.88%. So all in all, not too bad for Amazon considering how bad it was early on right on the announcement. Now, I will bring up our daily time frame here because I am still a fan of Amazon. I think it's still one of the best companies out there. And you can see this horizontal blue line is right where we're currently trading at 231.58. Now, as far as a pullback goes here, a pullback in the demand zone, I don't think you're even near a demand zone, kind of just in this free-floating uptrend that's been going on for the better part of the year. Now, if it got down to something like 218, 217, I might be pretty interested in it, but all in all, I think it's actually weathering pretty well. Now, why did it fall? Well, let's look at some of the numbers here and see if we can break this one down a little bit. Their earnings, fantastic earnings. $1.86 versus $1.49. $1.49 was the expectation. That's a beat of approximately 22%. That's great. Great for Amazon. So, okay, nothing wrong there. Revenue, $187.79 billion versus $187.3. Again, they beat on revenue as well. Your next number is their web services numbers. They came in line with expectations there. You had advertising. I was slightly down on advertising, but not much. Now, this is why I always tell people you really should just stay away from earnings, because on paper, everything there looked fine. I mean, advertising was down $100 million, no big deal, especially when you're beating other places by a couple $100 million. So why? It was their forecast going forward. They slowed their growth forecast for the next quarter to 5 to 9%, which was lower than most analysts' forecasts, which is why you get this big sell-off here today, at least in the after-hour session. Now, does it mean that this uptrend is over? Well, it certainly means that the momentum should start to slow down, because if you're not getting the earnings growth that you have been enjoying over the past couple of years, that obviously is going to pull some investors away from that. Why? Because investors are going to look for growth. And if the growth is between 5 and 9%, they may move on to something else that has a higher growth rate than Amazon does. So that's your big story for the day. All in all, I don't think it's having much of an impact. You notice here, we showed you the big drop in Amazon, but if you look at, let's go look at the NASDAQ futures and see how it looks right after that announcement came out. Really, it hasn't been that dramatic. Really, it's not been, in my opinion, dramatic at all. You had a real sharp sell-off, but it's kind of holding its own. See, it says 100 million versus 187 billion brought in. That's pocket change for them. Exactly, that was my thing. I really think these numbers are absolutely fantastic. You're making just tons of money, 187 billion in revenue. I mean, that is phenomenal. And, advertising was down just a little bit, but it's the growth forecast. And everyone right now, I think, is hinging on what goes on with growth. So I'd be looking at Amazon if it was a deeper sell-off, not at this current level, but if it was a deeper sell-off on AMZN, I myself would be inclined to look for a buying opportunity, but I'd like something deeper. I'd like more pain, and I think that the trend is still just so dang strong. I mean, even if you go from the lows from August of last year to where we are right now in the after-hour session, you're still looking at a gain on Amazon at 52% in less than a year. I mean, that's pretty phenomenal numbers there. So I think we're still pretty lofty. It's all about forward guidance solely, Andres. Right now it is. we talked about what does this new administration bring to the table, and it's just colossal uncertainty across the board, right? Whether it's trade, whether it's laws, legislation, crypto, everything is up in the air at this point. We're still trying to figure out how those chips are going to fall. So yeah, I think a lot of people are focusing on forward guidance. Where does this company think they're going to be in 6 months, a year, next quarter even? So there you go. Now I will dive into our next topic here, which is Trader Q&A. Wanted to come up with a slightly different graphic from the one that I had before. And again, if you guys have questions for me, type them in the chat. I'll be happy to answer them if I can. There's always stuff that I don't know about the markets and stuff that might be new to me as markets evolve, but I'll do my best to get you there. Now, first one I have was from Gary. So Gary says, can you discuss how algorithms, either written code or AI generated, impact or support the Trading Academy core strategy? I appreciate that you can't go or won't go into core strategy in much detail, but I hope to hear how supply and demand zones are supported by the program. So what you are going to start to see more of, and it wouldn't surprise me if this started to pop up all over the place, is algorithms that are tailored for specific strategies. I have friends that use, moving average crossover strategies. Fine, that's super easy to tailor with AI, right? You don't even need AI. There's tons of software out there that will allow you to do, MACD crossovers or Bollinger breaks or things like that. And you can simply program those in, backtest it, and see what the results may have been. What has been lacking is an automated tool that will go out there and find you supply and demand zones. Now, I think a lot of people use support and resistance levels, which I personally think there's a huge distinction between supply and demand and support and resistance. To me, they're very different if you understand the structure of a price zone. Will we start to see software that you can simply buy off the shelf that will draw out supply and demand zones? Probably. Now the question is, does it do it in the same manner that we do? I think we have a pretty unique twist on the way that we do supply and demand zones, the way we identify institutional buying and selling, or those footprints by institutions. So I think that's something that's kind of unique to our school. Now, is there a potential that gets automated? Yeah, I certainly think that that's a potential. Now, how does that impact you? You guys tell me which would be better. Choice A, that would be funny. Choice A is I buy a software that identifies supply and demand zones, and I just trade those. Choice B is to understand how to draw those supply and demand zones, as well as all of this trading strategies and tactics so that I can modify on the fly when needed. Right? Which one would be better, A or B? Now, most people will probably jump into just show me the black box system. I turn the switch on, it makes me money, right? That would be what I think most people would gravitate towards is A. For me personally, it's B. 100%. I've seen so many black box systems that start off good. And they can, they'll show you in a test environment, oh, it's amazing, it makes so much money, the consistency is so great. And ultimately what ends up happening is the markets change, that system doesn't work anymore, and it all falls apart. Now, Chad says, A, if we can test it and automate it, if you could go and modify the code. So I'll assume that it's not. You have to pay for the subscription, Chad. So this is not modified. You just basically buy the box system, and software updates will be provided to you. Who knows how often those can happen. So I want to understand what I'm doing. Totally, KT. And that I think that, at least in my opinion, having worked with hundreds of very, very successful traders, they would choose B. The ability to modify on the fly and understand. I'm sure we have people here who like to fish. And imagine if you had one lure, and you use that one every single time. Well, that might work in certain times of the day or certain weather conditions or light conditions, but there are different fish that bite different hooks. There's different time of day to make the lure more attractive. And knowing that gives an angler a huge competitive advantage over some automated thing that's just once at a time. So while I do think it will be a part here, Gary, I think it will be a part of the trading world. I think you're going to see more and more of them. I have a friend of mine, he runs his own company, and he messaged me and said, oh, I'm going to put $20,000 into an AI trading system. I'm like, good for you. Go away. I have done 2 trading systems before where I literally just gave money to this entity. They traded my money. And in both situations, 100% loss over time. 100% loss over time. And their numbers were fantastic. Their statistics were amazing, great win ratio, all the stuff. And it's just like they did so many trades that what they don't factor in is the cost of commissions, which is where they make their money. And all of a sudden just bled my account. And one of them actually went negative and they tried to get more money out of me. I said, no way. OTA software program could be taught to do this. Correct. It could be. And I think I don't want OTA to go, or I don't want Trading Academy to go that route. I don't want them to build a software that makes trades for you. I think you should always be in charge of your decision-making process. Can it draw levels? I mean, for those of you who use the Mastermind Grid, you know that there are hundreds of levels to choose, right? And it's up to you to use your discretion and say, do I like this zone? Do I not? How do I want to make this trade? Here's my entry, stop loss, price target accordingly. So I think there'll be a lot of people that go for the AI stuff. I personally don't think it'll ultimately, in the long run, be a successful venture. I think the markets are going to adapt, modify, change, and those AI systems won't adapt, modify, or change. I know AI is supposed to, but the track record of trading systems, in my opinion, is extremely poor. Extremely poor. All right, let's see. So obviously, how much better code generation is with ChatGPT? Why not do it yourself? I've only had this experience with Excel. Yeah, I'm not a coder either, but I know I could probably write some stuff in ChatGPT, but I guess I hate to admit it, I'm old now, and I like the manual style. I like the manual side of things. I get a rush out of picking my trades, planning my trades, and I feel it keeps my brain going. So I guess I will always be the stubborn old man that doesn't want to use the AI for trading. I use it for a lot of other things, okay? I use AI for a lot of things, but trading, no. Maybe down the road, using AI and systems to find optimal trade setups or things that meet my criteria, yeah. But as far as making trades for me, I'm not interested. If this hypothetical algo becomes popular, there'll always be a counter algo, therefore B. Right, exactly. And Daniel, in my opinion, once you understand how an algorithm functions, if you know there's a software and you understand how it's built, you can actually start to trade against it, knowing it's going to react in certain ways. That's what really opened my eyes back in the late 90s when I was day trading. So I would be day trading, Exodus or Broadcom. Those are the two I traded a ton of, Netscape as well. And I noticed Goldman Sachs would always do certain things on the screen. And I just started to follow their patterns. And Goldman's here. That means he's selling. Therefore, I'm going to start selling right in front of him. And knowing their actions, whether it's a human or an algorithm, gives me a competitive advantage that I can capitalize on. And remember, I'm not looking for massive gains. I'm looking for base hits, right? If I can pull 10 cents with a 3,000 share position, that's $300. Okay, I'm good. $300 is fine for a quick little scalp trade. Let's do it. Jeff says, AI makes pretty pictures and not pretty trades. Well, not yet, but Jeff, here's the thing. I'm sure a lot of you are already experiencing this, the influx of people that are trying to get you to buy their AI system. There are so many of them, and I wanted to report one of them to the SEC. It's called like NUSA or NUPA, and they're saying, we can get 8% rate of returns per week. I was like, yeah, no, I don't think so. I don't think you're getting, and I see a lot of false claims out there. Let's see. I'm going to keep on reading down here. What are your thoughts on MSTY for short-term plays? Good dividends. MSTY or MSTR? Tidal yield max. Tidal yield max. So I'm not sure on how this one's constructed. This is MicroStrategy option income. This is probably doing what I do. This is probably a wheel strategy using options, and I personally would rather do it myself. Is there a benefit to doing things like this? So for those who may be new, let me explain what a wheel strategy is. A wheel strategy is where let's say I've got $10,000, and I look and I see a stock that I'd love to buy it at $10, but it's currently trading at $12. So what I can do is I can sell puts. And each put's going to cost, if I sell the $10 strike price, each put will cost me $1,000. So with a $10,000 account, I could sell 10 puts. If the price of that security drops from $12 to $11 at any point, theoretically, between now and the expiration, I could be forced to buy those shares. But I wanted to buy them at $10 anyway, so great. If it doesn't get down to $10, I get to keep all that premium from selling those options. So to me, option selling is fun. I enjoy it. I think it's more consistent. These companies like this, these yield max, they're just taking and doing that strategy for themselves. And they're charging you a significant amount of fees for that. Let's go look real quick at the fee structure here for MSTY. 1 second as I bring up Yahoo Finance. Hold on a second. And let's just go look here. MSTY. Play Misty for me. Didn't even know that one was there. By the way, it's not MicroStrategy anymore. It is Strategy. Love it. All right, let's just show their basics here. So they're charging you 1% fee. That's 1%. Now, granted, that's not a lot, but I'm of the opinion of I could do better, right? I did this last year, and I had a significantly higher rate of return than 14.56%. Now, what makes this attractive for many people here, and that's probably why you asked me about this one, GS, is you could just buy it and get yourself roughly 14% per year. That sounds absolutely fantastic, particularly, since you're beating the S&P 500. If that's your approach, go for it. I personally would rather do it manually, and I save myself these expense ratio fees. And there you go. Let's see, what else do I got here? It's a choice for each person has to take responsibility for outcome, no placing blame. Yeah, that's why I love trading, and why I do this show, is I'm hoping that I can help you figure out your level of responsibility or what it takes to be responsible as a trader and not go for the gusto and strike out all the time. And a lot of that's going to be self-learned. So it says, a one all-be-all algo isn't a thing. Thoughts? It's only something that works until it doesn't. AI is supposed to be adaptive, right? So in principle, in theory, an algorithm will take in the current market data, analyze it, and rewrite its algorithm or reprogram itself to accommodate for that. Okay, I still have not seen solid results that I trust. I see people all the time on Instagram and YouTube posting videos of how much money they're making with algorithms. I don't buy it. If one of you is in one of those systems and using it and doing absolutely great, and you've pulled your money out, then and maybe I'll listen. But other than that, I'm not interested. Let's see. I think there are too many factors, announcements, world events, reports. That's what gives us our volatility and our excitement, Steve. I mean, that's why I love trading. Every day is a completely different war, a battle, a psychological warfare game between buyers, sellers, media, etc. So yes, love it. Do institutions have playbooks to run their algos to compete with other institutions? Chad, it's been a long time since I've been on the floor of an institutional trading floor, but I would imagine that there is certainly competition between them. But I would also argue there's probably some collusion between these big investment firms, right? If Goldman Sachs and JP Morgan are fighting each other for the same business, that could be bad for business. But really, the low-lying fruit is the average retail investor. So I think the playbook more is influence and sway the retail investor to perform an action that is counter what the institutions want you to do, and therefore they capitalize on it. But yes, I would imagine that there is some sort of maybe corporate espionage where you have people sharing the algorithms from different corporations and trying to figure out what each other's doing. Right now, they're probably using AI to figure those things out. Might this change technical analysis? Great question, Chad. So we look over at price charts, right? That is where I feel like I've made my bread and butter in just understanding price and what it's doing. I don't look at a price chart like, here's your SPY, and just think, oh, this is the S&P 500. I break it down even more minimalist and say, this represents the price of something. I don't really care what it is, right? In this case, I do know it's the S&P, but bottom line is I'm trading price. And I know right now, looking at this price chart, that my probability is better if I go long, period. I mean, that is a simple, easy blanket statement we can make right off the get-go. And I also know that buying right now might be a riskier proposition because I'm near all-time highs. So ideally, I'd wait for a pullback, buy in a demand zone, and buy in that uptrend, right? Those simple actions, I think, put the odds in my favor. Now, does this change supply and demand zones? I don't believe so. I believe it'll actually get more intense with supply and demand zones. I think it'll get more intense with Bollinger Bands and stochastics and moving averages. Let me add on, I don't know. You guys have a favorite indicator? If anyone's got a favorite indicator, just let me know. I'll throw it on a chart here. We'll look at it real quick. But realistically, these indicators are designed to give novices hope, dreams, expectations, and maybe keep them on the right side of the trade, but give them triggers to buy and sell. So if an algorithm, then Steve says, I use zero indicators. Right. A man after my own heart there, Steve. Neither do I. Every now and again, I put them on just for fun, but yeah, I don't use them. Just zones. Yep, zone price trends. RSI, So if he was first, we throw on RSI. Let's go RSI, relative strength index. We can do, I'll do Bollinger Bands too. Uh-oh, I had the spinning wheel there. I should not have a spinning wheel. Sorry about that. So here's RSI. And I will delete one of them here. So RSI, for those who don't know, RSI is right at the bottom here. I'll make it full screen. This one oscillates between 0 and 100. Yeah, the stream just did freeze for a second. I don't know why that did. But this oscillates between 0 and 100. So right now you can see it's at 52. No big deal. 52 is middle of the range, no shocker. Anything below 30 is deemed to be oversold. Anything over 70 is deemed to be overbought. So one of the strategies is when it comes back down, I'm just going to put a vertical line right here. I don't want to look at price yet. I'm going to put a vertical line right there. This is where we crossed down below 70. We were above it and came back down below it. Okay, so let's just go here and shrink this down. That indicator was literally telling you to sell. I mean, this one in hindsight worked out phenomenal on the S&P. You're in an overbought situation. So what algorithms will do is if you're not trading price, right, an algorithm is not really going to be trading price. It most likely is going to be trading some indicator. What that leads me to believe is I need to pay more attention as we get more involved with AI to these indicators. Because an AI program is going to say, all right, if we're above 70 and we go down below it, short the market. Does that make sense? Same thing with Bollinger Bands. Let's pick a different security. Let's go XLE. So you can see XLE right here. It was above 70 and came back down. I know that anybody who looks at RSI for overbought and oversold situations is going to be a seller there. And anybody down here, when AI is in an oversold situation and comes back in, they're going to be a buyer of this security. This just allows me to understand more clearly the psychology of the buyers and sellers, whether it's human or algorithm. So I think if you understand how indicators work and price, I think that gives you competitive advantage over the AI systems. So, and I mentioned Bollinger Bands. Let's throw BBs on here just for fun. Add on Bollinger Bands. So I like Bollinger Bands. Bollinger Bands are just simply an extreme. It's basically saying, let's look at something that's overbought or oversold. So in principle, you have your blue line here represents your 20-period simple moving average, right? That's the average of price over whatever, the last 20 periods of time. Let's pick a new stock. Let's go NVIDIA, okay? Now what it says is price should stay with I believe 96% probability needs to stay in that shaded blue area. If it's outside of that, that's an extreme. So you can see here, we had on January 7th, a huge gap up, and then it just came slingshotting back down. That's one of those signs that RSI or Bollinger Bands would have told you it's way overbought compared to its normal. Therefore, it should come back down. It came right back down to that moving average. Over here on the most current data, we've actually been outside that lower Bollinger Band. And we came back in a couple times. The most recent move that we broke out the lower Bollinger Band is now coming right back towards that moving average. So these are all just simple decision support tools. I think they're a crutch. I personally don't like to use them. I think they clutter my chart and make me more focused on what the indicator is doing, not price. So I just delete them and keep them off. But again, to each their own. And I think AI will be utilizing these forces. My chair got stuck. I think AI will be using these forces to calculate buy and sell opportunities, whether it's using ADI, MACD, ADX, all these different indicators or some combination of them. So I like to, I think I've mentioned this before. I really think a great way for you guys to get better at reading charts is to simply, look at price and pick a different symbol. I'll go, let's go to Amazon since it's so hot today. Look at Amazon and just tell yourself, okay, what indicator do I want to put on here? And before you put the indicator on, tell yourself, what is that indicator going to be saying, right? What is it going to be saying? Well, in this case, if I have moving averages, it's going to be above almost every moving average. So here's, I think this is a 200, well above it. If I put this to a 20, it's going to be well above the 20. All right? And you just know that by what price has been looking like how it's been moving. So well above it right now. I could put Bollinger or stochastics, and I always quiz myself before I turn it on. What does it say? You could very easily do that with TradingView. For those of you who are new, let's just do RSI again. So let's say you want to do relative strength. You could just turn it off, right? Just minimize it here, and then pick a different stock and go Microsoft. Say, okay, what's RSI going to tell me? RSI probably was overbought back here. On December 17th, it was most likely above 70. It came screaming back in. I don't know. I don't think it pierced it here, but now we're probably getting back down. My guess is you're probably in that 40 range. Let's see. It should be right around 40. Well, we were at 42. So I was pretty close on that one. And back here on the 17th, what do? We pierced it, right? So this is just a way for me to test my brain. Do I understand what price would tell me on an indicator? This is a great exercise for anybody here who wants to get better at reading charts. What time periods are you using? So KT, when I use technical indicators like RSI, Bollinger Band, Stochastics, it's almost always daily. These indicators were built for daily time frames. So yeah, you notice typically if I do use them, I'll look at them on a daily time frame. Now RSI, there's a default built into it, which is 14. You can modify those, but I wouldn't recommend modifying any of the time frames for the indicator. Main reason being, most people are using the defaults. And again, I'm using this not to time my entries, but to see what other people are going to be doing with their entries. And that might give me a little bit of a competitive advantage. Okay, hope that helps. Great, I love it. That was good. Good question. So Gary, that was a long-winded. We're at 28 minutes in, and I've just got through one question. Let's see. Back here says, Merlin, what's the difference between adjusted and regular earnings or regular shares? And why is the options premium significantly different from one to the other? What's the difference between adjusted and regular shares? So there's different types of shares. There's preferred shares. There's Class A, Class B. There's different grades of them. So I don't know all the breakdowns between them. And there may be different premiums on those options based off what the shares give you. Some shares give you voting rights. Some shares, like preferred stock, give you interest, like guarantee fixed rate premiums. So yeah, that changes the dynamics of how the options premium is priced and what they give you in that underlier. Is that situation where your stop go? Is that situation where your stop go with RSI? I wouldn't necessarily put my stop there. Right? And when we're using that situation on RSI, let's say on this Microsoft, I would be using, if I was going short here after this big rally up and it pierced the upper part of RSI, got over 70, my stop loss would be probably just above that candle. Right? So I'd be using that candle that marked the peak there on that turning point. Same thing. Let's go find an old oversold situation. So here's an oversold situation on Microsoft, right? Where it came back down. Our buy point was technically this day here. Well, to be safe, your stop loss should be below the lows, which would be a pretty wide stop loss on this one. All right. Let's see. Merlin, Google thoughts after earnings. Well, again, you're right there. There are two. There's Google. So this is the Google Class C shares, and then you have GOOGL, which are the Class A. I think Class C is the preferred. One of them doesn't have voting rights. And it was a weird thing they split years ago. One share of Google has voting rights. One does not have any voting rights, which is odd because honestly, that's one of the cornerstones of trading. Cornerstone of trading was we take a company, we slice it up into all these little tiny shares so investors can own a piece of the company and have a say. Well, with Google, when they did their little share split thing years ago, half the shares, no voting rights, others do, which is kind of silly to me. As far as from a technical perspective, looking at Google, I thought we'd have a bigger bounce from here. This doesn't make me very comfortable with the current level. So we mapped out two spots, right? We had this zone right here, which is the one we talked about on the show, which we're still kind of in it right now, which is about 190 to 192. And then you also have this, it isn't as good, but these kind of tails back through here, which is kind of where we bounced off of. And there's another one right around 185. So this 188 level is important. I personally did not sell. I was talking about selling some puts on this one just because I think Google's gonna do fine long term, but I just kind of shrugged it off and said I've got a pretty big exposure going on a couple other areas right now, and I don't want to go too overboard. But in this case, I'd probably be doing a breakout trade. And breakout trade meaning if I start to see momentum move up in Google over the next couple of days and gets above 92.41, then that would be a breakout of the zone, and I'm looking for that upside move to recover here. But the fact that it's kind of just stuck here for the last couple of days does not make me feel very confident in it. So yeah, not jumping in it right now, that's for sure. Let's see. Profitable automated systems exist, but they're not ones people are willing to sell online. Yeah, and I mentioned this one before, Sharif. If I had a system that literally I just turned on and it just made money, this is a discussion we had with Lex Lutheringhausen of Tradier. He developed a black box system and worked with them before. And I was like, well, why would you ever sell it? I mean, if I had a system that literally turned on and made nothing but money for me, I would not sell it to anybody at any price. I might give it to some close family friends, but that'd be the goose that lays the golden egg. I'm not getting rid of that thing. No way. Merlin, so when the RSI is overbought and above 70 for 1 hour, you're suggesting that traders are overpowering the AI algos. Not necessarily. What I'm saying is that when RSI is over 70, the price of that security relative to itself, it's not against anything else. RSI is internal measurement. The strength of that security has gotten so strong that it's theoretically overbought. Now, as we all know, overbought can lead to more overbought, right? And oversold can lead to more oversold. Trends tend to continue. However, in the case of RSI, what you're kind of waiting for is when it comes back down below that 70 line, okay, now I'll take a shot at it. So you're kind of waiting a little bit for confirmation that things are starting to slow down in that momentum. And as momentum slows, then becomes a short opportunity. So it's not necessarily you're competing with an algorithm. You're just looking for the momentum of that security changing. Let's see. I own both and don't know the difference. Yeah, I would just pick one of them. Just save yourself the grief. Save yourself the grief. All right. Let's go to this one. I want to make sure I get through this. Jeff, I don't know if you're here, but Jeff says, when selling options, are there rules around when you can be put the options prior to expiration? I was exercising some option contracts. I was selling puts on way before expiration. That's why it's good to rule to only sell options on things you want to own. All right, so here's the way it works. There's two types of options. You have European options and you have American options. So let's say I sell a put expiring next Friday, right, the 14th. If I sell an American option, the person who purchased it from me can exercise that at any time between now and expiration. A European option says you can exercise that option only on the expiration date. So Europeans take away a little bit of risk from you, right? You can get away from some of that risk of being exercised early. This doesn't usually happen, but it can. And I drew a little example here for you. Let me see if how my artwork does here. So I'm going to move some numbers around here. So bear with me as I just try to do this live here. It's going to be a little tricky. We'll make it work. So for the picture here, let's say you had the $34 strike, right? And I'll take this 31 away. So you had the $34 strike, and there's expiration. I'll just label it out here and say that this is in 30 days. So you have 30 days to expiration. And over the next couple of weeks, price has gone from 34, that's your strike, and now it's at 31. And let's say you still got 28 days left to expiration. This still will allow whoever bought that option from you to exercise this at any point. At any point. So in theory right now, this could be put to you, and now all of a sudden, if the price is at 31, you're on the hook to buy it at 34 if you sold the put. So you're now $3 underwater minus whatever premium you collected. Now, I've had it where I've been underwater significantly. I mean, I'm in MicroStrategy right now. I sold the 352.50s, and I got all the way down to 320, and I didn't get put the shares. But whoever bought those options had the choice. They could have. Now, could somebody do it if it was up here? All right, let's say it's at 35. Could someone exercise those options now? Sure. They could do it, but it'd be stupid because they'd be losing, right? They could sell it at 35 because that's what it's at right now, but instead they would sell to me at 34. That doesn't make any sense. No one would do that. But yes, anytime between now and expiration with an American option, that person can exercise it. And if it ends right here at 31, it's going to exercise automatically because on the broker's end will automatically execute that one. Now, I took this graphic here. I believe all stocks are going to be American, at least US stocks, are going to be American style options, meaning they can be exercised anytime. The European options list, and this is why a lot of people like to trade the indexes like SPX. So if you trade options on SPX, that's a European style option. NDX, the DAX, FTSE, Nikkei 225, the Hang Seng, those are all European style options. So, there's a huge demand for SPX options. That's one of the big reasons. One of the big reasons is that you can trade European style options. So I hope that answers your question, Jeff, and got that one out of the way. It's not something that I'm too concerned with. And to Jeff's point, what he said is it's not that big a deal if you actually really wanted to own it anyway, which I'm only doing this on stuff that I'm okay owning. I don't do it on exotics, rare things I think are going to go to zero. I do it on stuff I'm okay owning, like MicroStrategy, etc. RG says, I day trade SPX. Yeah. Great. Why not? Let's see. What else did I have? Oh, boy. Jeff asked another one. This is a little bit trickier one. So Jeff asked this question, and it's a long-winded one here, so I apologize if I have to take forever to read this one. But Jeff says, can you review some strategies to alert you of a market change? I ended up buying ANET, but at a higher price from a small correction it had last week. That being said, I'm an equal opportunity trader, and I'll trade anything that the chart shows me for a buying opportunity. Love it, Jeff. That's great. The other thing that I do have a full-time job, and I can only check on markets once or twice a day. So alerts work good, but I don't want to set alerts on 50 stocks and resulting in endless text messages. Would it be best to just set an alert on SPX or Russell? And lastly, for protection of your buying deep out of the money puts, how far out are you going and how long would you hold them for? Okay, multiple pieces here. So the first part is about alerts. I'm watching the markets a lot. I even have on my phone, my lock screen is a breakdown of the markets. So I'm always going to be within reach to see the markets. Plus, in what I do, I'm very fortunate because I can trade or do analysis all day long, and yeah, it's a great thing for me. For those of you who can't, I would set alerts on different market numbers. For example, you mentioned the SPX or the Russell. You could do that. Or SPY works fine as well. And just at levels where you'd be concerned, right? So if we look over here, let's say SPY. Let's see. We can do SPX too, but either one. Let's go bring up SPX since I think it's closest. Here's SPX. Let's say that you were long on this market, which you should be, and you felt that if it got below the low from last week, actually from Monday, which is 59.22 on the SPX, that would be an area of concern for you. Well, you could just go to, in TradingView, just set an alert, put that price level in there, and if it crosses this, have it text you or email you, and that way you now know and you don't need to be watching it all the time. Now, the challenge here, I think, is you have to, stay on top of your alerts and how you set them and make sure you got them in properly. But that's how I would do it if I was not paying attention to the markets. And most of the trades that I set up, I don't actually have to work that way. I don't have to. I'm not so worried about the little fluctuations. Most of my stuff, especially, I would say, is typically protected. So I'm not overly concerned if market starts to break down and I have stops in. The options I don't, because options are a little bit different, but all my equity plays I do. And that's how I would do it. I would just set an alert for the broad market indexes and maybe a couple of different markets, right? Maybe you have S&P and NASDAQ just to kind of be safe there. They don't always run together, but most of the time they do. Let's see, what's the last one? All right, SPX is cash settled at the end of the day. Yep. It's a nice one. But much better than having something that's delivered, but cash settled's great. Let's see, it's 240. Let me get to this one last one, and then I will wrap up. This is from Steve P. He says, I'm trying to determine if I should move from Bitcoin ETFs to Bitcoin. I do have a small amount of Bitcoin on Coinbase, but I have tenfold in Bitcoin ETFs, namely GBTC, FBTC. I understand that keeping Bitcoin off the net helps create scarcity, but also complication, especially with the risk of losing a fortune, losing your credentials. ETFs have a cost, but give security against losing credentials. What's your opinion? Love it. Steve, you've pretty much got a grasp on it. One thing I would urge you to do is get away from GBTC. GBTC is charging you 1.5% fee. If you look at the list of ETFs, I don't have it readily available here, but have made it up for you guys in the past. If you look at the list of the exchange-traded funds, and mainly spot funds, don't do futures funds, IBIT is the cheapest. IBIT is 0.19%, 0.19 or 0.12. Let me real quickly check And I'll do all three of these just so you guys can see here. We'll go and we'll start with GBTC. And remember, they're all basically tracking Bitcoin, so it should all be the same, right? Well, there's your 1.5% expense ratio highlighted in blue for GBTC. Forget it. FBTC. You scroll down here a little bit, FBTC is 0.25. So right away, you're saving yourself 1.25% if you just sold all your GBTC and bought FBTC. But wait, there's more. If you go to IBIT is 0.19, I believe. 0.12. It's literally half of FBTC. So if you took all of your current holdings and moved it into IBIT, you'd be saving yourself a lot of money and getting the same performance. All the charts are going to look the same. So that would be my suggestion, is sell that and move it into IBIT. Now, the bigger question is, do you go with an ETF or do you go with the spot? I know my preference. Yeah, avoid Beto. Beto's bad. I don't understand Beto. I don't know how that thing could even be improved. It doesn't track at all. It's just a mess. Personally, I would much rather hold Bitcoin. And I know that there's tremendous risk there. There's absolutely tremendous risk in holding it yourself because you have to be responsible for all your private keys and all that type of stuff. That's a risk I'm willing to take. I don't like my money or my assets in the controlling hands of someone else. So with crypto, I've got devices that I keep all my stuff here. It actually helps because it's off the exchanges, as you pointed out. If you're someone who is comfortable with being your own, security team and making sure you keep this stuff safe, then I would say get it off the exchanges. Take that GBTC money, that FBTC money, throw it into BTC. Buy Bitcoin on Kraken because it's the cheapest place. Use their advanced platform. Take that off onto cold storage and just sit on it. Now, if you're going to be actively trading this stuff back and forth and in 2 or 3 weeks you need your money out, then keep it in the ETFs. It's much more liquid. But I personally think you want to, that's kind of the whole premise of Bitcoin, is holding and having ownership of it. So there you go, Steve. My opinion would be, if you're going to stay in the ETFs, go to IBIT. Personally, I would go into Bitcoin, but it does have a significant amount of risk. Alvin says, I love the channel. I know you talk about silver. I saw that post that 33 million ounces of silver was withdrawn and can be looked at as a sign of pain to come. I'm not sure what it means. Well, there's always a rotation of assets, a rotation of money. If you look at, I didn't see the reference you're talking about, but if you look at SLV, which used to be one of my favorite ones, I no longer have ETFs. I just have physical silver coins, and I want to get some bars here soon. If you look at what's going on with silver, this is the perfect time to actually get out, because you've had this big rally up. Yesterday, you actually had a shooting star, which I did not mention on you guys yesterday, but you have this shooting star yesterday. In principle, there should have been some follow-through downside move here in silver. So if I was holding long this time, I would have been selling at this price anyway, right around $29.30, $29.40. All in all, silver still looks good. I mean, right, it had this small little lower low here, which wasn't great. But, if we get above this current level that it's at, bullishness, I think, will come back into silver. And again, it's going to fall in that same category as gold. Obviously, gold and silver benefiting from the uncertainty here, but you also had a similar pattern yesterday on gold with the shooting star formation, and I'll show you the gold futures here as well. There's gold futures. The GLD had it. The shooting star futures did not. See, Rose Merlin, is Bitcoin traded like stock, where every share bought is a share that others can't buy? It's actually different than that. Let me see. Or is it like a currency where there is endless amounts that can be bought or sold due to derivative? So you mean IBIT? So Bitcoin itself is fixed. If you're buying something, it's coming out of someone's pockets and then nobody else's, right? There's only so much Bitcoin that exists. There's 21 million total. So that's part of the reason I like holding mine, is it's mine. It's not on the exchange. If you keep assets in a bank, if you keep assets in a brokerage firm, your E-Trade shares, your Apple shares, your Microsoft shares, your US dollars, you keep any of that stuff in a brokerage firm, they can do all sorts of accounting shenanigans with it. They can take your shares, they can lend it out to somebody else who wants to short those stocks. They can do all sorts of creative accounting pieces with your assets, which is why I say take it off of the exchange. Can you take any crypto off of the exchange? Absolutely, Margaret. Absolutely. 100%. You can take all of it. It depends on the exchange you're using. Some exchanges don't allow you to remove. I think Fidelity is one of those where it won't allow you to take the crypto out. Robinhood used to be that way. I think they fixed that now, but I don't know because I don't use Robinhood. But yeah, with regards to crypto, it's better for you to keep it. And to your comment there about is every share bought if a share that others can't buy? Every Bitcoin I keep on the exchange just adds more uncertainty to the whole equation, because whatever Coinbase has of mine, let's say they have 2 Bitcoin of mine, they could be selling that to you, and I don't know it, right? I don't know it. As long as my account shows me I've got 2 Bitcoin there, I'm happy. But they could be selling that to somebody else and doing devious things behind the scenes. And that's what makes me a little bit nervous about these exchanges and brokerage firms and banks, right? That's why I'm such a fan of crypto. I actually own it. I have physical ownership. Then with all the Bitcoin buying, how is price not moving? Well, I would argue that it has been moving. Granted, it hasn't been moving over the past couple months, but I mean, I think that we can make the argument that this is a reflection of massive demand having come in. And if you go back to these low points here in November of 2022, we were down at 16,000 and we reached a peak of 108. So to say it's not moving and it's up 584% in 2 years, no, I wouldn't quite agree with that. However, there are derivatives. There's options on IBIT, so there are external forces now that people could be using to help push prices down and up. There's now futures products and derivative markets. I mean, if you go out here to Coinbase, you have Bitcoin futures on the CME, but if you look at Coinbase, for example, here's a derivative market for Bitcoin. I can trade Bitcoin futures or XRP, Solana, SWI. All of these are futures products. So now this allows me to go short these markets. So I put a few dollars over here just in case I wanted to go short these markets. But that's as markets evolve, we're starting to see more and more and more and more stuff popping into the scene that you can trade, and futures products are one of those. Will you reveal your average? No, I won't. Sorry. I'm not going to reveal my average cost of Bitcoin. I can tell you it's significantly lower than Michael Saylor's. Well, I'm at moving in the last 3 months or so. Yeah, it's weird how it's just been kind of going sideways, and I think it was bought up on expectation, and we haven't seen much follow through yet from the Trump administration with regards to what he said. Personally, like many of you, I believe the reason we're getting this kind of slow bit going on here, first off, the guy's doing so much stuff. With him and Musk, it's just like it's chaos. I feel like I'm standing in the middle of a tornado just watching it all just fly around me. Right now, I personally believe that you're seeing Trump hold off a second, position himself appropriately. Once he's set up appropriately, he will approve it and benefit from it. And part of the reason for that is we have these new ETFs coming out by Truth Social. So if we look at DJT, these guys just released or filed applications to create their own series of ETFs. And here is the list of ETFs. So you have Truth.fi, which is the short one for finance. They have the Made in America ETF. The Made in America, it's called a separately managed account as an SMA, where they have somebody external manage that account for you. They have the U.S. Energy Independent Fund, same thing with the SMA, and then a Bitcoin Plus ETF, which will probably be the holdings of of World Liberty Financial. Now, I personally don't like this. I look at this, and to me, this is such a colossal conflict of interest because Trump owns over half of Truth. So he owns over half of it. Is there anyone in this room who thinks that Trump will not disclose to Truth Social what is coming? Is anybody in here that believes that Trump will not disclose what is happening to Truth Social first? So if I'm Truth Social, which is supposed to be independent, but it has over 50% ownership from Trump, and we say, let's say the Bitcoin Plus fund here, right? Trump is going to be in meetings with all these high-end people, and he's going to say something like, okay, in our strategic crypto reserve for the United States, I want it to be 50% Bitcoin, 30% Ethereum, and then 10% Trump coin, and he'll list them all. And he's going to literally get on his phone and somehow communicate with Truth and just be like, hey, these are what's going to go in it. And they will load the boat on those cryptos. And as soon as they release the news, those cryptos will go through the moon and he'll profit from it. Same thing when you talk about, Made in America. We talk about supporting American companies. And there may be American companies that all of a sudden receive funding that was going to multinational, maybe foreign companies. I'm going to do a real quick speed test here because I don't know why I'm spinning. It shouldn't be spinning. I'm just going to check something here real quick. My internet is incredibly fast right now too, so I'm not sure why I'm spinning. Hopefully it's better now. I'm with many of you. Lisa says, I have a problem with that. I have a huge problem with that. This is like the ultimate form of insider trading. It could not be a bigger form of insider trading. And I really hope that there's something to watch out for that. That said, I think it's really important if this does go through that every single Margaret, it's because I was criticizing Trump. I sometimes come across like I might be a Trump hater. Look, there's some things he's doing I really agree with, and there's some things he's doing that I really disagree with. So, nobody's perfect. And with this, I think what this does is actually gives you guys a little bit of I don't want to say a heads up, but I'll be honest, I will be watching these ETFs. And I'll see if I can find if there's a place where they have to disclose their real-time allocations, because this may be your insider advantage. If you're building a crypto portfolio, you may as well just buy this Bitcoin Plus ETF. The only thing I would say why you shouldn't buy this ETF is because they probably are going to have a lot of fees. And they're not live yet. They just did the petition form, the application. When these go live, I will absolutely tell you what they are, how they work, what the fees are, what's in them. But man, this is just unbelievable insider trading. And it begs the question, does that mean that DJT will start to have a resurgence? Now, I'll be honest, I think that this is a win-win-win for Donald Trump. It's a win because it's owned by DJT. So DJT gets preferential treatment. So Trump owns 50% of that. He owns 80% of World Liberty Financial, which in my opinion was a scam to begin with. Now all of a sudden it's starting to become more legit because they raised a bunch of money and bought a bunch of stuff. He could also be telling World Liberty Financial what's going into the Bitcoin Plus ETF. That's a win. There's another win, but I can't think of it off the top of my head. So it'd be interesting to watch these ones, because if you're going to build a portfolio, you probably want to be buying what's in this Bitcoin Plus ETF. The challenge is liquidity. TruthFi is an unknown company. Never been there before. They're using a third party, which is kind of an unknown to me. I never heard of this company before, to do their finance and all the paperwork and all the legal stuff. What will probably happen is there's going to be very, very low liquidity on these markets. And we'll keep an eye on them, right? If they start to get millions of shares traded per day, maybe you go with it. But my guess is you're probably going to see large amounts of fees attached to these. But interesting, good for Trump. Smart. Use it while you can. At some point, what he's going to get is he's going to get an investigation into manipulation of prices, and can he pump his own securities and things like that, which he has been doing, and that could bring some problems for him down the road. What's your opponent of single stock futures? Not a fan. I wasn't really a fan of them before. Never really used them. When I did years ago, but there was no liquidity, so I just walked away from them. All right, guys, I didn't realize I have a 3 o'clock meeting, so let me wrap this up real quick here. Apologize. I know you probably want more because I'm having fun today, but I love all the questions you guys sent. Thank you very much. Our crude oil chart for the day. We're coming right back down to that little yellow box. Perfect. Love it. Thought we would bounce here right around 73. We did for like a day. We're going to bottom seek and come right down to this lower level at 68.42. We're somewhere in that 69 mark for crude oil. Your gold taking a little bit of a reprieve, but nothing to be worried about. I would expect there to be some profit taking here, honestly. I don't know, Liz. I don't even know if they exist anymore. I haven't touched them in years. They sounded cool when they first started, and then it felt like it just failed. Bitcoin, again, Bitcoin's showing slight weakness today, but like I said, until we get below that 88,000 mark, I'm not concerned at all. Your Russell was down 0.33, tapped its head against that 2,337 mark, which is kind of the lower end of this overhead supply zone we're coming into, so I would anticipate some resistance there. Your dollar index, looking weak. We'll probably come back down to this yellow box as well, which is your demand zone, which brings it to about 106.80 would be my guess there, 107 or 106.80. Your 10-year, we'll talk more about this tomorrow, but we had this head and shoulders pattern, which we mapped out. It's coming right back down to our first area of demand, which is going to be about 4.4%, which is very close to where we are. After that, I think we're going to be headed down to 4.2% on this, and I'll talk to you more about the president tomorrow and how he's pushing for yields to go lower. S&P, 0.32% gain, nothing to be that concerned with here. I think all-time highs may be on the plate next week, and NASDAQ was up 0.5%. I think they'll be back at 22,050 here within the next week as well. So good moves there. As far as economic data, you do have some huge stuff tomorrow. Today, of course, we had the British pound with their rate cut of 25 basis points, but it's all about mañana, which is the unemployment rate. They're expecting the unemployment rate to stay the same at 4.1%, which personally I think is pretty fine. No big deal there. And then earnings front, we had Amazon, which we talked about. The only other companies reporting tomorrow were another cannabis. Aurora had a fantastic move. So Canopy Growth reports tomorrow. You have CBOE, and that's pretty much it. A lot of smaller stuff on the earnings calendar. So that's it for mañana. All right, that's going to do it for me, everybody. Sorry, I was almost going to go longer. Oh, my Toyota's fine. Toyota's great. Just needed a little tune-up. I love it. I'm a Toyota fan, man. Simple, easy, reliable. Great vehicle. All right, everybody, that will do it. Thank you so much. If you guys have comments, questions, things you want me to cover for tomorrow, I love it. Steve, Jeff, and Gary, thank you guys for the questions, and all of you who have been chatting in the chat here today. I appreciate it. It's always fantastic